Morning, everybody. How are you all doing? Morning. Who's at the top? Mumo. Morning, Mumo. Morning, Evil. Morning, Jules. Morning, Mark. Morning, Travel. How are we doing? Morning, Ismet. Friday morning. Finally. What have we got today? What are we doing today? Sorry, I'm a bit late this morning. Still got wet hair. Look, had to jump out the shower quick. Yeah. Recap of this week's FX. What's been going on? Q&A. General trading stuff. We'll be trading the UK indices this morning. I'm already long on the FTSE. Wow, look at the spread on the FTSE this morning. That's huge. 2.5 pip spread. So triggered into a long on the FTSE. Not quite sure why the spread's so big this morning. We've had GDP numbers. Maybe that's maybe the market's still reeling a bit from that GDP. But anyway, so yeah. Morning, AZ. Morning, Vitali. Good night, even. Morning, Sarah. Right, so we'll start off with the news today. Just wanted to see if this actually takes off today, this FTSE, because we've just had the GDP numbers, but it doesn't seem to be going anywhere. We're down at these lows, which are holding at the moment. We've been sitting down here now for 3 days after the initial drop this week. We did put in a new higher high yesterday, so we've got a nice double bottom W reversal, market structure reversal at the lows. So there's a good chance today we might start and try and rally back up into last week's and last month's levels. So doesn't seem to have any volume today, though. We'll come back to that in a minute. Morning, Paul. Morning, Reverend Insanity. I love that name. Holy Grail failed miserably. More testing to come. Yeah. So for those of you that aren't in the member streams, Vitali came up with a strategy which on paper was amazing. In the back tester was amazing. In real world trading, just doesn't work because the spread overnight kills it, unfortunately. So more work to do on that one. But I think there might still be an edge with that strategy, you know, because the way that we're trading it is we're looking to get in at the end of the day and we're just looking for some kind of pullback. So I'm not sure whether 1 o'clock in the morning is the best time to get out. It might be actually later. So I think more testing on that might produce an edge, but we'll see. But certainly can't trade over the swap. Morning, CK. Morning, Paul. I think I said morning, Paul. So FX wise, at the moment, I've got a fair bit of exposure on, which is great. Can't bank anything this week because everything I've got into is just sitting around. It's been sitting around all week. I've been flip-flopping into positive, negative all week on the P&L. So we'll look at that all in a minute. But today we've had GDP for the UK, which came out as a negative 0.1. If we look at the pound pairs, there's not really been much impact this morning on the pound. As you can see, that's the GDP release. Not done anything. So although that is quite a negative, it's a 0.3. We were forecasting not to get recessionary figures. We did get recessionary figures. Typically that would be negative. But the market hasn't reacted yet. So we'll wait for London to open. You can see there's the gap down on the news at 7 o'clock. But we don't seem to really have gone far off of it. You know, we're nowhere near an ADR. We haven't even tested the lows on the pound New Zealand yet. So, yeah, no real impact. Pound yen's coming down, but I think that's probably yen rallying. Yeah, that's yen moving. So it's nothing to do with the pound. So we'll see. We've got a reversal alert there on the pound odd. So we probably will have a little bit of a down day starting on the pound. But we'll see what happens. So that's today's news so far. This afternoon, we've got retail sales for the US. So that's your main market mover this afternoon at 1:30, an hour before New York Open. This week, if you look at the news we've had this week for the US, virtually everything has come out as forecast. So CPI came out spot on what we were expecting. We had the PPI figures exactly as forecast. We had the unemployment claims came out like 4K different to what they were last month. So, you know, this week, the US dollar has had everything spot on, but it's rallied like crazy because the Trump effect. He's employing all of his cabinet. I don't know what you call it. In the UK, it's called a cabinet, but in the US, he's employing all of his, you know, heads of department. US, they're loving it. So the US dollar's rallying quite hard at the minute. We'll see what happens with the retail sales this afternoon. Retail is less impacted than everything else we've had this week. So, but the market doesn't need the news to be directional. It just needs the news. So we may find that they kickstart a complete retracement and profit take move this afternoon when the retail figures come out. So we'll see what happens. But that's the news today and what we've got coming up. Yesterday's CPI figures obviously were all as forecast. So I'm going to quickly go through that. Where are we here? So the economy is not sending signals that the US central bank needs to be in a hurry to lower interest rates. Bullish US. This is Powell, obviously. So everybody listens to Daddy Powell. Expect inflation to come down towards the 2% goal, which it is, and we should be there within the next sort of quarter to 6 months. Labour market has cooled significantly, meaning there's no longer inflation expectations to rise, meaning that interest rates can drop. Just commenting on the PCE numbers there. Labour market is solid. So basically Powell yesterday, very bullish. And it seems that although he's very bullish for the US, not really interested in dropping interest rates. So it's fairly bullish US, but we've had such a massive rally on this. As soon as the Trump effect starts to fade, I think we're going to get a big drop on the US dollar, but then a continuation rally moving into next year. But it's whether or not we get this Santa rally going up into Christmas, because when we get the Santa rally on the US indices tend to rally in December, meaning that the US tends to drop in December. So if you believe in seasonal activity, which personally I don't, because there's a 50-50 shot of it happening. I've done the research. Yes, sometimes there is things that happen more often than not, but still sometimes it doesn't happen. So you can't just buy the US dollar or sell the US dollar because 5 out of 7 times it's done it. This could be one of the times it goes the wrong way. And if you continuously keep pressing the button the wrong way, you're just going to hemorrhage all your money. So you go with the flow. But yeah, it's all very bullish at the moment for the US. So we'll see what the markets make of it on the news this afternoon. We have space to cut rates if needed. PPI reading was slightly more of an upward bump, but you know, it wasn't particularly bad. So if you look at the PPI figures, we got what was forecast basically on that. So you know, there's no shock there. The market had factored this move in. The market got exactly what it was expecting. So yeah, that was pretty much it. We had some Japanese GDP numbers come out. The Japanese, I was looking through this morning. I couldn't see anything about FX intervention. I'm just going to quickly scan through again. No. So this US dollar yen, we got to keep an eye on this. It's coming down nicely at the moment. So we've got some nice yen strength starting to come into the market. We are way up there above the 150 level. We're above, we tapped into 156, 157 area basically this morning. But yesterday we hit that 156 level, rallying. So this thing needs to start coming down. Otherwise the Japanese are going to start getting cross. And if the Japanese get cross, you know what happens when the Japanese get cross. But so we're getting perilously close to the intervention move, which was done over 2 days, and then obviously the collapse afterwards. That's within 125 ADR of reaching back to the second propulsion move out of the intervention. So we're getting, you know, to a point where we want to start really paying attention to what the Japanese are saying. If this thing doesn't break today and continues to rally up, if the US dollar is strong today on retail, for example, don't want to do it, but I'm getting close to wanting to press the button short on everything against the yen. But it's an incredibly expensive trade to take, and it's risky, obviously. Any intervention may not happen. But we've had a lovely reversal alert this morning. So if you want to short that today, look for a push back up into the propulsion move. Look for that M pattern to start to form. So that's your overnight news. Obviously, GDP figures this morning came out. The year-on-year forecast for GDP is 1%. So we're not in recession. We're not planning to go into recession. Yes, we've had recessionary figures. Recession is technically classed as 3 months in negative number. This isn't 3 months in negative number. So if you go and have a look at the GDP, yeah, we were a 0, a positive, a 0, a 0, a positive. This is our first negative. Doesn't mean we're going into recession by any means. It's just not been as good as expected. We've got Christmas coming up. Always good for GDP. Yeah, Christmas. So don't think there'll be a problem. So it's not really bearish, which is why I expect we've not seen a big reaction on the pound because it's not really that bad. It's just 1 month. Yeah, everybody has a bad month. Normal. So there's your news. There's your GDP quarterly. Slightly revised on forecast, but not a lot. So there we go. So that's news. We've had the CPI numbers come out for France. Pretty much spot on. Lagarde is just getting everything spot on at the moment. Have to give her her dues. She's doing a bloody good job. So there we go. Right. Indices, no trades on the DAX today. So pre-market range on the DAX was too small today. And the 5-minute ORB is too small. There's just no volume today. So not taking anything there. Yeah, I mean, we've had a bearish engulfing going at the open. Doesn't mean anything. So looking at the DAX today for levels, if you are trading it, we're bang in the middle. This could go absolutely anywhere, couldn't it? So we could come down and at ADR and test the previous day's low and yesterday's low areas. We could obviously rally straight up. That's yesterday's high, so watch that area for a bounce today. Other than that, you've got to rally straight up into the weekly highs. We're in the middle of no man's land. Could go anywhere. So quite happy not to be trading that today. FTSE, I'm long, but it isn't doing anything. So FTSE, as I've already said, we've got W pattern reversal, new higher high gone in. So looking for a higher low for market structure to break to the upside. But we'll see what happens. There we go. Morning, Neo. Morning, Pot DJ. Pot DJ, hashtag drawdown week. Is it? For me, it's sideways week at the minute. Just can't get anything. It's not everything I'm in is just not moving this week. So I'm in the Aussie CAD long. We're there. We're above break even, but not going anywhere. Aussie US long. Second entry taken on that one yesterday, just sitting around. But obviously that's US dollar, so that is very strong at the minute. Euro Swiss in profit, just not getting anywhere. So dog pattern. It's a very very well-known trading pattern, the dog pattern. Turns into a Batman and then tends to come down. I just made that up completely, but somebody's going to be off selling a course on that in a minute. Pound CAD. Long on at the moment. Obviously, pound's coming down. It's close to target. Targeting propulsion on that one to the upside. We've got a triple weekly low there, look. 3 weekly lows. And a propulsion break. So I'm looking for them to retest the propulsion break. But obviously with that negative news now, might not get there. We'll see. New Zealand CAD. Long on that. It's going the right way. I haven't got a target on that. There's not enough money on it. Look for that propulsion to get filled. And New Zealand US. Again, first entry taken on that one yesterday. This is a really nice level. here. Let's come out to the 4 hour. So this is the area we looked at. So it was a previous support, turned resistance, then we broke it, used it as support again. Every time we've tested the area, we've come off of it. We're there again. Yeah. But as I said, we're in a different situation now. So I'm just looking for some kind of pullback on this US move at some point. But, you know, this thing's like a steam train at the moment. So got a long on. As much as I'd love to hold it for a large retracement, I'd be looking more for somewhere around here, just in case it flag breaks and continues south. So in case that market structure continues to the downside, that's kind of where I'd get out. That is also a good target for a normal pullback, but we've got these lovely big propulsion gaps here. But, you know, this is run up into the election expecting a Trump victory. That's the election getting a Trump victory. It's good for the US. So I'm not going to be targeting too far. Just want to get out of the US fairly quick if you're in it in any way, shape or form. So far today, ADRs, nothing. It's been a very crap week this week for ADRs. We've had very few ADR hits this week. We've had a couple of 125s this week, but very little other than that. There's one there. So no ADRs so far this morning. Quite a few weeklies. But as you can see, the vast majority of these weeklies, pound US dollar, euro US dollar, it's all the US dollar basically, Aussie US dollar, all the US dollar pairs. So the only other thing we've had extended is the pound CAD, euro CAD and Aussie CAD. And obviously the Canadian dollar gets dragged along with the US dollar. So that Canadian move is based off of what's been going on with the US. So so there's some weekly range hits there, but obviously they've all started to play out yesterday. So we had a nice reversal alert and retest there. New high just about gone in today. So looking for some kind of price action like that on that one today. RSIs, we've had a few RSI extensions, hence why I've got some exposure on, because we've had some RSI extensions this week. US dollar CAD still massively extended. This thing went parabolic again yesterday. We got an ADR hit on this yesterday. 77, so only just hit ADR, but it hit ADR again, so another ADR day. So yeah, absolute steam train this one. The trouble with this is obviously because it's US CAD and the CAD gets driven with the US, this is always going to win when the US is strong. So, you know, if you get a strong US dollar, the CAD's never going to stand up to it, and obviously this is just the perfect storm at the moment. But yeah, it's stalling out today, but we'll have to see what happens with that one. Right, so that's RSI's extensions, etc., etc. FTSE still trying to break long, struggling, market struggling today. Beautiful day yesterday across the board, winners across the board with SIH yesterday, all the US indices, lovely clean breaks. Wasn't the best of clean breaks. So clean break short on the NASDAQ. I got out on a trailing stop, unfortunately. TP1 at 3R was there. I have a 2R trailing stop running. So we came down, just missed my target at 3R. Then it pulled back. So I got a 1R basically out of that. So there's a nice little profit on the NASDAQ yesterday, but then it obviously collapsed down. The Dow, very lovely clean break. Very easy one yesterday. Can't really see it because it's behind the info panel, but wrong way. So yeah, lovely clean break yesterday, straight down target, and then taken out just about 2 and a bit R on the trailer, and then obviously it pushed back down. That's 5R. That was the target yesterday. So I got trailed out, but yeah, nice easy money yesterday. So all good. But today we don't seem to be doing anything. Evil, I see the new trading setup you're using, H1H1. You take more exposure in a number of pairs. Not sure what you mean. But with lower money risk per single pair. I'm using basically the set file that I posted in Discord. So this is the setting. So I'm using ADR and RSI. I might get into two positions at the same time because obviously, as it says there, use only one because it runs a signal on both. So if both are true, you'll get two entries. 0.2 risk, 1.3 multiplier, 3/4 of an ADR, and I'm running it on the hourly time frame. So the reason I'm running on the hourly time frame and not using multi-time frame is because I'm using a weak RSI. So I'm using the RSI 7030, RSI 217030 on the hourly. So what is going to happen is on the hourly time frame, we're going to get things like this. Yeah. So that is an RSI trigger to go short. However, if I do not get a signal candle, i.e. a 1 hour candle opening above and closing below the moving average, while that is extended above the 30 level, it won't take a trade. So although I'm using 7030 as a level, what I need is either it to be much higher than 70 to give the market time to do an hourly reversal while still being extended, or I need embedded scenario like this where we are sitting above the 30 for a period of time and the market is still moving up because that's why we're sitting above it. And then, for example, there we get a trigger and I'm still above. Yeah. So it's kind of equivalent to using H1 M5, but I need more of a push or a sustained push or a sustained hold above the level. Yeah. So it's the same thing, you know, this is the thing with any strategy that you trade, there's always a different variation. Every indicator has multiple inputs. Yeah, I can use multiple numbers in the RSI. I can use different close types. I can use different levels. There's a million settings for indicators. There's no right or wrong one, but each one is going to give you something different from a signal perspective. But with position trading, it's not about the signal. It's about what happens after the signal. So what I'm looking for is just something to be pushing quite hard before I get a signal. So it's either got to be way above, and by the, you know, to come down and still be above that level, it's got to have pushed bloody hard, or it's got to be sitting up here. Yeah. But you know, that back test that I did on this setting is nowhere near as bad as some of the others. So it's less, I kind of disagree with what you're saying there. Take more exposure. I don't really take more exposure. I take less drawdown on that. On the testing that I did, I take less drawdown on it. I'm more interested in drawdown control at the moment and getting in later. The problem with RSI as a signal is it is you can get extended conditions without the market having pushed very hard. Yeah. So by going up onto the hourly time frame, I need an extended, very extended, or an embedded RSI. That's the reasoning behind me changing to just running on the hourly time frame. If I run it on the 5-minute time frame, I will get every single RSI extension will give me an entry. Every single one of these will give me an entry, but that doesn't mean the market's extended. Yeah, we got an RSI extended there. Look, it's not really extended. We had literally an hour's worth of movement. The other thing that I've been testing as well behind the scenes and looking at is the possibility of time-based RSI, which means that we have to have moved from a level below the 50 line within a certain period of time when we get the extension. So for example, let's just say it's 5 days for simplicity's sake, which is a week. Yeah. So what I want is I want the RSI to be below the 50 line and then to extend above the whatever line extension I choose. But that has to happen within 5 days. So for example, here we've got an extension above. It's actually there. But the last time it was below was back here. Yeah, below the 50. And we've had 1, 2, 3, 4, 5 days pass. So for it to get from there to there, yeah, it has to have had multiple up days. Whereas to get from here to here, yeah, which is from there to there, that's not extended, is it? That is extended. So this is something else I've been looking at. When that condition is met, look back X number of days and have we had a condition below there? So I want it to have actually traveled, which is going to give you more of extended condition. It's something that I'm looking at the moment, and I've been running some tests on. And again, the problem I have with it, as I usually do, is there's a million different combinations. Sometimes you get from there to there within 24 hours. Yeah. So that's a 3-day push. There's, again, other ways you can do it. I'm also looking at variations at the moment where we have to have had a minimum of 3 bull candles in a row and an RSI extension for an entry. So I'm just looking at multiple ways of trying to smooth out some of the entries that get entered into too fast. But then I look at it and I run tests and I find that I miss tons and tons and tons of amazing trades, because that, if it pushes down, that's an entry today. It was an entry yesterday. You may have got an entry there. If that now pushes back down into there today, you've missed a beautiful trade because the condition of X wasn't met. So it doesn't matter how many things you enter, how many filters you put in. The more filters you put in, the more ways you think of doing something, the more you will just end up going around in circles and realize everything works and then nothing works. Yeah, there is no way to predict the future. So you just have to pick something. So all I've done is in my testing, I've looked at, my focus right now is reducing trading costs, because that has been a big factor in my problems I've had this year, and reducing drawdown. So the simplest thing to do is to make sure that that movement happens after we are still extended above that level. And to do that, it's much harder for the market to achieve. Therefore, we will have had a stronger move. So it's a very quick, easy filter to apply. But I'm looking at all sorts of things, you know, and I can come up with a billion. We've done it in the member stream, haven't we? We've got a new strategy, the lazy trader strategy that Phil came up with. It's a position trading strategy based on a completely different entry signal, a completely different exit signal. But all we've done is remove the stop loss and it makes money. Yeah, position trading makes money. This is how the banks and institutions do it. We know that. There's a billion ways to get in. So it's just trying to find ways to get in which reduces drawdown and reduces hurt. That's literally it. And this obviously reduces hurt, because if I'm not being charged an absolute fortune to get into a trade, my hurt is immediately reduced. So that fixes that problem. What I was concerned about was not getting any exposure on. That has this week allayed my fears. I've got 6 trades on. So that's not a problem. And it's lovely sitting here in these and going, this isn't costing much. This isn't costing much. It's brilliant. It's an absolute eye-opener. But, you know, let's just quickly have a look at the indices. Long break FTSE, straight back down again. Buyers are really struggling today. Catch up. Yeah, so sorry, to answer your question, Evil, yes, I have got possibly more exposure going on to individual instruments. Yes, so you're quite right actually in what you say. Yeah, exposure wise, I might take more positions on a single currency, but my risk is reduced at the moment. George, morning. JC, morning. I remember you were thinking about switching back to ORB. Yeah, I need to do some work on the ORB. I'm loving the SIH is absolutely killing it at the moment. This is the trouble with trading, isn't it? You look at something and it's like, it's all right at the moment. But then all of a sudden it picks up and you're like, yeah, I'm sticking with this because it's amazing. This thing's killing it. SIH is absolutely killing it at the moment. It's having some multiple multi-win days like yesterday, 4 out of 4. You know, you get days where it just kills it, and it's had loads of them recently. I think with the indices, what you're going to find is when Trump's in, this thing's just going to work, because Trump he moves the stock market so much, and there's eagerness to get into the market. And obviously momentum at the open is what we're interested in. So I think it'll probably do very well. But the ORB, I need to do some work on it. I want to revisit the ORB EA and look at the way that the additional entries are executed, because it works very well. However, there are days where it just doesn't. And that's what we've got the loss filter in there for. So I want to look at, and I've got an EA that I'm developing at the moment, which is based on ORB, but different. I want to look at multiple scenarios. So I want to kind of build an EA for indices specifically that has all the standard kind of strategy executions in it. So yesterday's high-low bounce plays, opening range breakout plays on 5-minute, 15-minute and pre-market. And I want to build it in such a way that you can trade them in any way you want to, or I want to, so I can test all the different variations. And I want to come up with a if then do this type scenario. So, you know, like we've got with the SIH has got a certain amount of intelligence built into it. So it goes, if the range size is too low pre-market, don't take a break because you're likely to get whipsawed. If the opening range is too low on the open, don't trade it. Again, here today, exactly why we don't. You'd have been whipsawed, so you'd have been hedged immediately. Don't trade it. So now what? So now I'm sitting here on the DAX going, well, no trades today. But what I should be doing is, right, okay, now what then? So we couldn't take an opening range breakout trade. So what do? We're going to sit here and we're going to wait for a high-low test today. So today, now the EA is going to sit here, or should sit here, and monitor and go, right, well, let's wait and see what happens when we push down to this propulsion or this low. And we'll try one out of here. So I want to make an EA that's a little bit more intelligent in the fact that it knows there's good setups, it knows there's edges in the market that play out on a regular basis. But if those edges don't present themselves, we need to kind of look at the next edge. So the next edge for me on the DAX today is that. Very simple. We're going to get limit orders at the high and the low of yesterday. We always do. It's a fact. Every single time it happens. It's an edge. But it's an edge that sometimes works and sometimes doesn't. But we've got to have a way to continuously trade it. Better than just sitting here doing nothing, isn't it? So I'm going to develop that further. But it takes time because obviously I need to put all the logic in, test all the logic, and then put all the variables in there so that we can do system parameter permutation testing on it, all that sort of stuff. So, but I want to develop it more. I want to do more index trading because I want more deviation. I keep saying that. I want more variation in the strategies that I'm running. I'm obviously trading this. I'm trading position trading. We've got the new lazy trader strategy, which is a variation on position trading, which takes different trades using TPs. And we've also got my trend pullback, which is executing well. So I want to just get 3 or 4 different strategies running at the same time that have all got decent edges. So when one isn't playing out, the others hopefully will be. You know, and if they're all playing out at the same time, happy days. If they're not all playing out at the same time, sad days. But that's trading, isn't it? It's just the way of the world. I think with more Expo, evil meant more than 2 US. Yeah, sorry, yeah, I misunderstood that. US dollar CAD doesn't seem to be stopping going up. Tried drawdown control a couple of times, didn't seem to work. Yeah, that's parabolic at the minute. Still. I mean, this move is, you know, this is why I got out. Because it's the elections. You know, I said, you just got to get out. Elections are incredibly volatile and unpredictable, and that's exactly what we got. And the election gave an exit, so I took it. But if you're still in it, you know, just go back and look at history. This is all you have, yeah. The job in position trading specifically is to survive. Yeah, we're not trying to get it right. We're trying to survive. Yeah, you go back historically, you know, and look for parabolic moves. Yeah, grindy moves are nasty. There's always an exit, usually out of a grindy move, but it's a grindy exit. Parabolic moves have parabolic exits. Yeah, it's always the way. When you see something parabolic, you see a parabolic exit. When you see a parabolic move, you see a parabolic exit. Parabolic, parabolic, parabolic. That's all it does. A-shape, V-shape recoveries, parabolic pullbacks. This is just what the market does. When you're in it, when you look at these, it's like, well, yeah, it's obvious, isn't it? But what isn't obvious is it's 1, 2, 3, 4, 5, 6, 7 weeks of trading. 1, 2, 3, 4, 5, possibly 6, maybe 8 weeks of trading. 1, 2, 3, 4, 6 weeks. Yeah. So this US dollar CAD move that we got going on at the moment, somewhere in the region of 6 to 8 weeks is a normal exit on it. We've been in this for, or if you are still in it, you were probably in it from where I was initially, which was back here. 1, 2, 3, 4, 5, 6. You're 6 weeks in to a parabolic move. It's absolutely normal. Yeah. 1, 2, 3, 4, 5. I mean, that's a 68 retracement. You'd have been out here on that one, but look how long it takes. Depending where you got in. I mean, if you got in there, you're on week 7. But this isn't unusual, is it? It feels horrible, but it's not unusual. It's the norm. It's nothing we haven't seen before, and it's nothing we won't see again. This is why you have to be scaled in correctly, because you are going to have to survive squeezes, and squeezes are... The longest squeeze I've been in is 3 months. I was in a squeeze for 3 months. I had to manage a position for 3 months. Very rare. Very rare. Once every couple of years, maybe. But you're going to get them. And it's things like this. It's changes in interest rate or changes in monetary policy. The Japanese yen, 20 years, negative interest rates. Now we've got positive interest rates. What's it going to do? I don't know. But if you get it wrong, you're likely to get squeezed on it, because it's something we don't know how to handle. The market will just do what the market does. And if the market sentiment shifts completely and you're in it at the time of shift, Aussie New Zealand is a great example. The parabolic move I got stuck in on the Aussie New Zealand. I'm going to have to go back a bit. This one. Yeah, got stuck in this. Somewhere around there. Yeah. 1, 2, 3 months. It happens. Yeah. 6 to 8 weeks. It's just this is the perception thing, and this is the horrible thing about back testing. Everything I say in here happens. You can't deny it doesn't happen. Yeah. Every single move has a correction. It has to, because there is no physical way of banks making money without the correction move. The correction move is the profit take. When you build a position, the same as you or I do, we take profit when the market comes back the other way. The market coming back the other way is the banks taking profit. You can't look at any chart in history and show me a chart that doesn't have that move. Every chart, every time frame, there isn't anybody on the planet can tell me anything different, because it's a fact. It's what we have. What you have at the moment on the US dollar CAD is a 6-week parabolic move. There will be a profit take on this. I can guarantee it with 100% certainty, because it's never happened that it hasn't done it. Your job is to survive it. And if you can't survive it, you close out with a loss, as I did. Yeah, took a loss on it. I made a lovely profit on that, but it was not as much as I took as a loss. Yeah, it cost me 10%. And it will do. Every year I will have a losing month like that, and I use a losing squeeze. But always, always, when I get out of the position, literally the day or the week after, that starts happening. This is why they call it a short squeeze. I'm just a short. And they squeeze me. And as soon as the squeezes pop, the shorts pop, there isn't anybody left to short it. It can't do anything but come back down again, because you can't buy from non-existent participants in the market. ADR on pound yen. This yen's rallying nicely today. It's just, it's a horrible, horrible one, but it's not unusual. Lovely move on the yen. Just trying to think if I've got any yen trades running on the other strategy, but I can't remember. But yeah, it is pushing hard. But remember what I say about the climbing up the stairs and falling down the elevator shaft thing, yeah? You know, look at this move here. So we had a 2-day drop, which cancelled out a 1, 2, 3, 4, 5, 6, 7-day rally. Yeah, we climb up the stairs, fall down the elevator shaft. This is panic selling. When they see their profit, their P&L they've generated during that period starting to collapse, they also become a seller. When they become a seller, the sellers see the sellers entering the market and add sells, which makes it's just a herd mentality that happens. Banks see huge profits building, and then they see some of that profit vanish. They will then go, I need this profit. By taking these two profits, that profit gets smaller, which means they take that profit, which means it collapses. That's just how it works. And it's the way that everything has always worked in all time. It's just horrible to sit through. Look at this morning. You're going to get a reverse alert in a minute on this. Today, looking lovely, isn't it? It may or may not. But if you want to get an aggressive drawdown control position on right now, it doesn't get much better than that. Well, it does if there was resistance, but we haven't got any resistance because we're out in the highs, aren't we? So there is no resistance until you're coming back up to this level from 2020, COVID, basically. This is the highest high since COVID. But it's just a nasty one at the minute. I agree. Like Travel said, I meant the number bear. Yeah, I've already answered that, haven't I? For position trading, is it best to set a hardline max stop loss as this year has been so many extended runs on so many pairs? Yes, you can do, and it's built into the EA, isn't it now? So you've got in here drawdown control settings. You've got close all trades at max DD. If you set that to true, when your position gets to, in this case, 5%, you're out. Done. It's a hard stop loss. It's there if you want it. Personally, I'd rather make that decision than have it made for me. The reason I have drawdown control turned off, I don't actually. I mean, I've got it set to start getting me out of 6 trades because, again, I want to be a little bit more aggressive with drawdown control at the moment, just because it's been a very squeezy year. But next year might not be. You know, you don't need it, do you? If you put it there and it doesn't ever get triggered, doesn't matter. But if you put it there and it does get triggered, it just takes that decision-making process away from you. But the reason I would like to do manual drawdown control, not using this as an example because it's parabolic, but let's say, for example, I short here and it goes up to here, right? If I have it set at 5%, for example, as a level, and that is 5% drawdown on my account, right? I don't want to get out at 5% here. Why? Because of this. There's a high probability of a bounce happening at a monthly high. Yeah, it happens over and over and over and over again. Yeah, it bounces. It's likely to bounce there. So if I have it set automatically to close my position there, the next day you're going to get a 1.5 ADR bounce because it's hit a limit order in some large institution at the monthly level that it sold from last time. You're going to be livid. Yeah, I would rather, when I get to this level at 5%, go, holy crap, I'm in 5%. I'm going to have to start cutting some of this if I can't get an aggressive drawdown control position to work off the monthly highs. So I don't want that ability taken away from me. That's why I don't use it. But it's there if you want to. If you want that, just get me out, then do it. But what you can do is, you know, if you say, for example, you're in that situation, this is a good example, and that is 5% drawdown, that is somewhere around about 5.9 or whatever, I don't know, I'm making numbers up. But if above that level, it's going to be, let's say, 6% in drawdown, just turn it on and set it to 6%. And then if it blows that level, it's an automatic exit. You've got that as an option. But I personally wouldn't turn it on and leave it on, but do back testing. One of the reasons, I can't remember who it was, I think it was AZ asked for it to be entered, put in the EA as an option, and because he wanted to do back testing with it. So put it in the strategy tester, yeah, and set it to set it up to 5% or whatever, yeah, or 10%. You know, go for a big number on a single instrument. A 10% drawdown is a lot. Yeah, it's hard to get to 10% drawdown unless there's something really, really parabolic going on. But if you're cutting on the way, to get to that level is going to be quite difficult unless it's really, really squeezing. So set it up like that, run it, and see how many times that triggers. And you'll see it trigger because your P&L will go like that. Boom. Yeah. But I can guarantee you over the period of the test over 3 or 4 years, that will still come out massively positive. But yes, you're going to take a hit sometimes. But it's there to use. That's why I put it in there. But if you, and it's really all of these settings that are in the EA are there for the people that haven't got the mental fortitude, if you like, or the control mechanism yet to do this manually. Yeah. And it's not a bad thing. Yeah. I didn't have it. I've been guilty of, and I still am every now and again, holding positions too long. That is I'm taking this bit out of your control because you're crap at it at setting. Yeah. So use the position trader EA. The reason it's got so many inputs is because I want it to be as versatile as possible for people. If you have a strategy that doesn't use any indicators and uses pure price action at support and resistance, for example, these are your friends. If it doesn't work out, let the EA do this for you. If you're crap at drawdown control, let the EA do drawdown control. If you're good at drawdown control and aggressive drawdown control, turn them off. It's there when you need it. But it's also there to help you back test. And the most important thing with any strategy that you trade is confidence in the strategy. Yeah. So when I'm in big drawdown on anything, I always look at history. It's a kind of support mechanism. Yeah. This is a lonely job. There's me and you guys and you're sitting at home on your own doing it. Yeah. There's very little interaction you have with other people in this industry. So you have only got history as your friend, as your support mechanism. So when I'm in something that's absolutely massive and it does something I'm not expecting it to do, I'll go back and I'll go, right, well, that move was over 6 or 7 weeks. What happened last time we had something like this? Oh, what happened last time we had something like this? And just go back in history. This gives you the confidence of what might happen. So if that doesn't happen, it might have a grindy move. There's always an exit on a grindy move. It's probably a break even and it's not a profit. Hence, going in line with swap is going to mean that you're not going to hemorrhage money on the trade in total. But that's all you have, history. So, go back and just have a look at the past because it tells you what's going to happen in the future. The outcomes. There's only 2 things. We covered this in the member streams. This is a binary market. Once it's gone down, it can do 2 things. It can go back up again or it can go back down again. You have to try and find the worst case scenario. And this is what backtesting is about. If you go into the backtester and you do a system parameter permutation test on drawdown control max, and you start a test at 5, and you go up in 1% increments to 15. And if you run that and every instrument that you run this on with whatever parameters for risk you've got set at never goes above 10%, you can comfortably trade 8 instruments with a 10% max get out and not blow your account. Test that over 8 to 10 years. You've got a high probability. Still doesn't help, does it? When you're sitting in 21% of drawdown across 6 to 8 instruments, you have to remember this test. You have to remember this is normal. US dollar CAD is normal. For it to rally for 6 weeks on the trot in a squeeze is a squeeze. This is what we call a squeeze. It's normal. It happens. We can't go back and say, oh, I wasn't expecting it. If you've done any testing whatsoever, it's normal. It's just we've had more this year than normal because we've had completely different interest rates playing out in different ways to normal. But the new normal is still within the parameters of what the old normal was. Nothing's changed. It's just uncomfortable. So, and it's always the US dollar. It's always the US dollar or the Aussie in my experience. Those are the 2 that will get you squeezy. If you eliminate those, obviously you're eliminating half of the trading opportunities out there. But again, test. Everything reacts differently. Every market moves different, doesn't it? but with a higher risk per single position, 0.5. Good to understand the idea behind the change. Yeah. If you're reducing your opportunities, are you looking to increase risk? No. No, because if you increase risk, you're just going to increase the chances of you getting into a squeeze. My next position on US dollar CAD has just gone in, 5 lots short, absolutely bricking it. Good way to put it. Good level though. I mean, it's not a good level. It's a. But you know, what does that do to your break even? Yeah, if your break evens are sitting below 225 ADR, 200 ADR and stuff, and sticking that 5 lots on brings you up to there, there's a 58% chance you're going to hit that. No, a 42% chance you're going to hit that. Yeah, so you've got 42% chance of getting out of US dollar CAD today. You have to just play the odds. You have to be aware of the probabilities. Yeah, when this is down here and you're hitting this level and it bounces off of this 2-day high, you've got to have the balls to take the dog out for a walk for 3 hours on the downs or wherever, and make sure that you don't watch this for many hours, because just because it's bouncing, it's going to scare you. It doesn't mean it's going to go like that. It means it's bouncing, and it will bounce because there's orders there. We know there's orders there. They did it last time over and over again. They kept doing it. Yeah, it's going to bounce there. Expect it, embrace it, and then go, come on. I was watching I'm trading a Top Step account at the moment. I've got a strategy that I've been developing. Well, it's actually an old strategy. I used to trade in prop, and I decided to do a Top Step evaluation. And they got this thing called Top Step TV, and I got engrossed in it yesterday. Or was it the day before? Can't remember. But I was the only reason I'm using Top Step is because they don't have a trailing drawdown, which is lovely. I was watching this video, and one of the guys on there, who's an ex-floor trader, basically said, when you see a trade going your way, everybody's immediate reaction is fear mode. So this is a great example. We see this trade coming down here today. You can visualize it happening. When that happens, your immediate natural human response is fear. Yeah. What you need to do every time you see that fear happening is flip it on its head and go hope. So every time you get scared, just go, I'm not scared of this. I'm hopeful that we're going to move. And that one thing removes the fear. Break even the trade, right? And let it go. Walk away. Turn it off. Shut the charts. Go away and come back at 9 o'clock tonight. That bounce that's down there makes you a fortune. But the fear gets you out and you miss the exit. And it's turning that fear of a bounce into hope. Because when you look at the bigger picture, and this is what they were saying, when you scroll out and look at the bigger picture, the obvious place for this to come is 150 ADR. This isn't even an ADR. Look at the hopeful picture. I'm hopeful it's going to go down there. And what's to stop it going down there? Absolutely nothing. Absolutely nothing. There's a 50-50 chance when it gets to that level, it's going to go that way. But we will always focus on the glass half empty. It's human nature. The very few people that make it in prop are the ones that have the glass half full. And those people are the ones that don't sit there watching the charts. They're the ones that put the trades on and go off and do something else. They come back and go, $6,000. Lovely. I'll close that. And I did that yesterday. I had a trade on yesterday on the evaluation account on the NASDAQ. No, the ES yesterday. It was, I can tell you when it was 5:30. There. Yeah, so I was short. There. I think I was short there, something like that. I was short there or something. I don't know. Got short on the break. It got down to here. I went spinning to my exercise class at 10 past 5. So I basically stuck a break even on it. Yeah. and I stuck a TP. I don't know. I stuck it miles away because what I thought was I originally had a TP. This is a good example actually of exactly what they were talking about. But I had a TP here, right? So my TP was here. Obvious. Yeah. That was my TP, right? I went spinning and I was like, I'll have my TP there. And I decided to move my TP down to here because I thought, screw it. If it's going to break, it's going to break. So I put it at break even. I moved my TP down. And as soon as I came out of my spin class, which was an hour and a quarter later, I saw it had hit my TP and bounced up. And then hit my TP and bounced up. And I was like, oh, if only I'd have left it where it was. So basically, I got back home and I closed the position out. What did it do? Went straight down to the TP. Yeah. The reason I closed it out there, that was about $1,000. That was $1,700. The reason I closed it out there was because I had $1,000. But it was obvious now to look at it that that was what's going to happen. But you get scared. When you see the thing you're expecting to play out, you get scared. And if you turn that scare into, hey, it looks like it's going to work, rather than, hey, it looks like it's going to fail, you will make money because the market can only do two things. It's binary. You have a 50% chance of the thing that you want to happen playing out, but you focus, and we all do it. It's human nature. We focus on the 50% that is going to hurt us. We forget about the 50% that's going to make us a load of money. And it's the only way, I think, to stop you doing that is to shut the thing. And I've said it many times. When you get into a trade, when you get into a position trade, yeah, if you're taking it on the hourly chart, right? If you watch this today on the hourly time frame, every time you see a bull candle, you will brick yourself, to use AZ's terminology. If AZ moves up to the 4-hour chart to monitor this, he won't see those hourly bull candles that turn into 4-hour bear candles, or those hourly bull candles there that turn into 4-hour bear candles. He will just see 4-hour bear candles. And his next support that he will see is there. He won't be focusing on the 2-day high support anymore. Yeah. So going up a time frame removes the fear. Yeah. And again, this is something they said in this in the Top Step TV show, basically thing, was one of the guys in there was trading a 1,000 tick chart, and he then said, what I normally do when I see this is I move up to a 2,000 tick chart. So he just goes up a time frame, and he's obviously trading ticks rather than minutes, but moving up a time frame just smooths it all out, makes it all less scary. And then you can move up to time frames higher if you want to. So, okay, I've got my aggressive drawdown control on. Let's see where this is on Monday. Yeah, everything that happens today isn't going to scare you. Yeah, if you see a big bear candle, that fear is going to turn into hope of hitting that level, which is going to get you out. It's all about psychology. The whole of trading is geared against human nature. The fight or flight is the thing that we cannot control as a human being. This is all about fight. Yeah, you immediately want to fly, but you should be fighting, not flying. That's it. You turn around and you run because you're scared. Don't be scared of it. How many times have you seen me get out in here and then it do that? And I say it over and over again. If I hold this, people have said it in here. People have said, Lee's out, I'm staying in. Or Lee's got in, I'm not getting in. I'm going to wait until Lee's in drawdown 3 or 4 positions, then I'm going to get in. Because I get it wrong all the time. Everybody gets it wrong. There's no trader on the planet that doesn't get it wrong, because unless they've got a time machine, they've no idea where it's going. Yeah. Yes, we can use support resistance, and we know that that happens. But look at this one. Yeah. I said in Telegram, in Discord here, I said, someone said they just got out, and I said that's where I'd be getting in, because you're going to get a bounce. Whether the bounce works or not, no idea, but you'll get a bounce. This is why we do aggressive drawdown control at support resistance, because you will always, virtually always, get a bounce. Whether it actually reverses or not, no idea. Yeah, it will always bounce around, but that didn't work, but it still bounced. Yeah, this is what aggressive drawdown control is all about. Taking it at levels that make logical sense for the market to have orders which are going to execute. If they execute for 2 to 3 hours, all you need normally to get out of a trade is an ADR or a few hours worth of price action in your favor. That's it. That's all we ever look for, to have an emergency exit. Use that. That's what it's there for. But if you automate it for no reason, for example, it may well take one here. I mean, there's nothing wrong with taking one here, but it will take them automatically. So this is why I'd rather do all of that part of it that the EA can do manually, because I want to be in control of it. But if you're not sure and you're no good at this part of it yet, that's what that's for. My next position, EA sounds good. Like a manual trader would trade through the day. Yeah, so that's basically what I want to do. Again, so I'm just going to take one off the FTSE. So 50% out on the FTSE. You know, I don't want to labour the point, but this is a monthly resistance. Look at it. It's bouncing. It's bouncing because there's orders there. Yeah, it's bounced multiple times. It's bouncing because there's orders there. Now, it doesn't mean that the guys that started this propulsion move aren't going to run them over today, but there's a 50-50 shot. But fear makes me take it, but not fear really. This is common sense. My target is here, was here. The candle went there. I'm not an idiot. Yeah, that's why I took it, but still could easily roll straight through that level, can't it? Next place is here, yesterday's high. It'll bounce there. I don't know whether it will reverse there. It will either do that or something, but it will move. It will move there. Yeah, it's all about identifying levels, because that's all price has, is levels. So out half, so profitable morning. But yeah, so what I'm, you know, these are the decision making processes that I go through, and one of the reasons I want to is kind of develop the ORB strategy. The ORB EA and the SIHEA only do one thing: they trade the opening range. Once the opening range is done, they're done. If the opening range doesn't work, for example, in prop, I trade the opening range breakout in that top step account. If it doesn't work, I then sit on my hands and wait for a setup to come. And for me, a setup is a bounce play somewhere. So I'm now looking at, right, that didn't work out. What shall I do next? I'm not just hitting the button trying to get in because I see a bull candle or a bear candle or whatever. I'm looking for where's it going next. And I can either try and get on that move towards it, or I can wait for it to get there and then try and take a bounce play or a reversal off of it. If it's a bounce play, it's a scalp. If it's a reversal, I hold it longer. I don't know what it's going to be, but that's what price action reading tells you, isn't it? So I want to build something that tries to look for all of those opportunities. A little bit like the opening range breakout EA or the price action toolkit EA has all those candlestick patterns built into it, and you can select which ones you want to use. So you could set it up and say, I want to trade the ORB, but I only want to trade the 15-minute ORB, or I only want to trade the 5-minute ORB, or I only want to trade the pre-market. Or if none of those meet the criteria, I then want to only trade bounce plays, or I want to trade propulsion gap bounces. You know, there's all sorts of strategies you can use, but at the end of the day, all scalping indices is applying risk reward to discretion. So I'm just trying to come up with the discretion that I use on a regular basis to put in here. You know, and it doesn't work. There's days where I have down days. My prop account at the moment looks like 1,500 up, 1,100 down, 1,000 up. Yeah, but there's an 1,100 down in there. I did nothing different on the 1,100 down day to what I did yesterday and what I did on the 1,500 up day. I did exactly the same things. The market did something different. That's the difference. Every single trade I took the day before yesterday was wrong. I mean, it wasn't wrong because I got the trade wrong. I got the trade exactly the same as the day before. It's just the price action went the opposite direction to what I entered into. That is 100% out of my control, isn't it? But there are setups and plays that happen over and over again. Everybody that trades futures knows about volume profile. Everybody plays the same things. They play volume profile node bounces, they play VWAP bounces, they play value area high low bounces. Everybody's doing the same thing. Yeah, and everybody has good days and bad days on the same days. If something breaks at the opening range and you're trading the ORB strategy, everybody makes money. You don't control that. They do. That's it. The market's doing that. Today, if you'd have taken the 15-minute ORB long, well done. If you took the 5-minute ORB long, you're hedged. If you're using the opening range breakout EA, you got a stop out, and a break. So you're probably at break even on the day now. Yeah, there's 1,000 ways to do everything, isn't there? But it's just trying to build something that can give me the versatility so that I can wander away from the charts and come back and let it trade it. Obviously, futures you can't trade with MT4, but CFDs you can. It's the same price action, exactly the same price action. Just trying to catch up on chat. Over the weekend, I'll watch the videos with indices and SIH. I will bomb you with questions. That's fine. Looks like it's stalling now. Aussie, New Zealand. Oh, we're talking about US dollar CAD. Yeah. So you've had the reverse alert basically, and again, market structure plays a massive part in my scalping that I do on indices. So, when you get a confirmed, new lower low, lower high, lower low, structure break, I'm looking for a pullback play with a stop above there in the indices. And that's exactly the way that I got into the S&P yesterday. The S&P short that I took yesterday was a market structure break short on the 5-minute. Look at it. It's absolute textbook. Yeah. Low, lower high, lower low. Then we push down to another lower low, lower high, higher low. This is where I got into a symmetrical triangle pattern, short break. I think that's the short breaker that I took, that one there. Yeah. Lower high, lower low, double bottom, double top. Yeah. Short, stop. Yeah, it's market structure. It's the easiest way to trade the indices. When the indices do that, you get killed. Everybody gets killed. And this is the point, where you have to have a rule in the EA, which is basically if losing trades equals 3, stop for 30 minutes. Resume. Read price action. What's it doing now? If it isn't breaking out and doing something, come back another 30 minutes. This is where everybody gets it wrong, where I've got it wrong many times, especially with prop, because prop just makes you go tilt all the time, which is why they make so much money and no one trading prop does. But it's all about basically hitting this pause button. And again, one of the things that they were talking about in that Top Step TV, Michael Patak, who's the CEO of Top Step, was saying they're going to introduce a pause button, which is a great idea, I think. If you're on tilt and you're going wrong, you can hit a button and it goes, you're not trading for 30 minutes. You go, I changed my mind. Tough. You're out. Come back. Go and walk the dog. Cool down. Go and have a beer. Don't have a beer. Don't trade on beer. It's not good. But all that sort of stuff. I think they're probably one of the best firms out there of the bad bunch. But, what can you do? I think I've caught up on chat. If I actually hold its target would be my biggest ever win, but that's going to take massive balls. It doesn't take massive balls. It takes you to do that. That's what it takes. Some of the best trades I've had ever have been on the yen. In the past, not so much over the last year or so, but in the past, trying to think if it was pre-COVID or post-COVID. Post-COVID actually, because it was when I was running the members group years ago, before YouTube basically. But it was on the yen pairs, and the ones that would make me the most money with the strategy that I was trading at the time were the yens, because I was asleep. If I'm asleep, I'm not watching the charts. And if I'm not watching the charts, my targets get hit. And it is an absolute fact. If you are short on this now, I don't know where your break even is, but say your break even is there, and that is worth 5k or something, whatever, I don't know. But if that's worth 5 grand, yeah, if you go and do something else today and never look at a chart today, come back on Monday, you could be 5 grand richer, or whatever that number is. If it's going to be your biggest trade ever, biggest trade ever. But the only way that trade is going to be allowed to play out is if you do not interfere. You've heard it. Everybody's heard it, probably. But if you haven't heard it, you're going to hear it. Every course you'll ever hear will tell you to get in, set a stop, set a target, and never touch them. Yeah. The reason is the edge of the strategy has been developed on that. If you move that to there, the edge vanishes. The reason you're told to leave stuff alone is because if you leave it alone, one of those two scenarios with 100% certainty will play out. It's a binary market. It can't do that and avoid these two. It has to hit one. Yeah, it's a binary market. It's either going to do that or it's not. Let it do one. Your break even's at 150. So yeah, and this is where the real balls happen. If you've been stuck in this and that's your break even, unfortunately, I hate to break it to you, it's going to bounce there. It is going to bounce there. I'm 99.9% sure when you get to this point, it's going to bounce. Yeah, because everybody that was short, every institution, every fund that was short there, flipped long. They are long. They're going to bounce it. Your job, when they bounce it, is to not get out, because it could be back down here by the end of next week. Yeah, you don't know what's going to happen, but your entire body has told you that that's happening. So your entire expectation is that. But then again, my expectation here was that what I actually got was an ADR to the downside that would have eliminated all of my losses last month. I couldn't hold it. Yeah, there's nothing wrong with being human. Yeah, if you get there and you get out and you go 3% loss, well done. 99% of other traders have lost 10, 15, 20% on this. That's an achievement. If you get out of break even on a position trade that you've been in for 6 weeks, that is a win. Don't look at it as a loss. It's hard. But then all these little other ones that you get banking all the time that you don't notice because it literally goes up, comes down, hits target, and you don't even get out. You don't even see the trade because it's in and out. That lazy trader strategy that we're running the tests on in the members group is this one. Yeah, I haven't even looked at this. I haven't even looked at these. Everything that's generated that, I haven't looked at it because it's just doing what it does. It gets in, it gets out every night. It just gets in every night and it gets out. That's what it does. I don't even need to look at it, do I? This just builds up. I'm focused on this. Yeah, I want to see what's going on with the position trade that the pound US dollar is being developed with. Yeah, that's what I'm interested in. My focus is this. We got 4 on now. What's ADR? 401. Yeah. It's not ADR. That's actually 4 hour. That's ATR. It's the 4 hour ATR. But we've got 4 on now. But all it's got to do is pop back up here. Yeah, so I'm focused on this, but I'm not even looking at what's generated 0.75% because it just happens, doesn't it? We don't worry about the stuff that works. Your focus as a trader has always got to be on what is going wrong, what isn't working, how can I eliminate loss, how can I make things better. The stuff that you do that makes you money, you don't even need to touch it. Just let it carry on making you money. Yeah, it's a business. Focus on that. I need to buy a dog. Barry, man, yeah, you do need to buy a dog. I've got a dog. It's very handy. It was very handy yesterday. Going exercise classes, right? Brilliant. Yeah, I have spin classes I go to every night, 5:30, right? So literally I leave the house every day at somewhere between 5 and 5:10. That's half an hour after the market closes futures wise in London. So it's basically a point where I've usually got a trade on something and I have to leave it. I always come back to either, oh, it stopped out, or holy crap. And it's the holy crap happens because I'm not watching it and going, oh, there's a bull candle, close it. If you've got a dog or an exercise class, it eliminates you being able to make stupid decisions. Yesterday on that US dollar, it was when I got back yesterday. Where is it? On this trade yesterday. On these, I can't remember where it was, on the 5-minute candles. It was basically what I was doing yesterday when I got back was I was like going like that with my stop loss. Every 5 minutes I was doing that. And just know what? Because I was doing it. If I hadn't have done it, yeah, it's just one of those things. I think that was a different trade actually. But it's all about what you do. This thing can only do two things. Yeah, this is either going to do that and it's going to hit that, or it's not. It's going to come down and it's going to hit that. It's binary. It can't do anything else. The only reason it can do something else is if I interact with it with this thing. Yeah, if I use this mouse thing here to press the button that shuts that out, I am forcing a scenario. It will force one of the two scenarios I have. One of them makes me around about $1,000. One of them makes me around about $400. If I let this play out, one of those two things is going to happen. However, you have to also look at everything else that's happening in your trading, everything else that's happening in your portfolio, and make decisions based on the greater good, if you like. Yeah. So if I've got a hedge on over here, and you saw me do this yesterday in the afternoon session, if I had a hedge of 320 over here, and I'm sitting on 520 here, my decision-making process will be to walk away with 200. Someone else's decision-making process may be I'll see if that comes down to there and gives me a break even on the day, or see if I can get 500 out the day. That's discretion, and there's always going to be that involved in your trading. And this is why no system or strategy that two people have will ever produce the same results, because no two people will do the same thing. You will press the entry button at a different time. Even if you're using an EA, you will get a different price, potentially, because it's a different broker. You will always press the exit button at a different time. You'll always have a different amount of risk on. You'll have a different number of trades on. Yeah, this is why signal services don't work. You can follow a signal service that has an amazing track record, and somehow you don't get the same results because you're not going to do the same thing. That one thing that they did that you didn't, that made them $2,000 and made them have a profit of 1 month, that was the one thing that you didn't do that month. This has to be done yourself. You can't do it any other way. It's just one of those things. What's the difference from trading stocks and futures? They're totally different markets. Stocks are stocks, futures are futures. I don't know what you mean there. Google it. Stocks are Amazon, Nvidia, Google, Microsoft. Futures markets are things like lean hogs, NASDAQ, indices, oil futures. They're different, totally different markets. Break even is on 150. I've already covered that. And if Lee, with his 15 years of experience in trading, is still human, I can't blame myself if I get scared. Exactly, yeah. You can't program this. You can't reprogram. This is the thing, you know, with trading, right? This is why this analogy of 5% of people make it, 95% of people fail. And I think the reason is 95% of people are not programmed to do it. That's it. You either have or you haven't. Formula One racing drivers, yeah. I don't know how many thousands and thousands of kids in the UK go through from karting to Formula Ford, Formula 3, up to to get that one Lewis Hamilton, but there is only one Lewis Hamilton, right? The rest of them failed because something makes him different. There's something different wired that you can't wire into somebody and you can't unwire from somebody. There's something, either it's there or it's not, and I strongly believe that. And it's the people that grab this with their teeth and go, I'm going to figure it out. They're the ones that make it. Again, keep going back to this Top Step TV. It's really interesting watching it because it's literally all day. It's a TV channel, basically. But one of the things they were doing was looking at sports people. Yeah. And, you know, the people that become professional footballers started at grassroots in a football club with 15 different teams, and one of them made it to the Premier League. But there's something different about that person. That person was at the park every single day doing keepy uppies. He was out with his dad every weekend and his dad was in goal. He was playing practice 3 times a week. He was doing 2 matches. He was playing for the county team. He was doing football all the time. If he wasn't doing it, he was watching it. I spend my entire day, all day, doing this. And if I'm not doing this, I'm developing systems, strategies, back testing, learning. And that's what I've been doing for the last 15 years. I've been living this. If you don't have that time, I don't think you can do this. This is the thing. You've got to be able to invest time into it to learn it. And you need to have something or someone that teaches you all the stuff to throw away. That's what I got. Luckily enough, early in my trading career, I got people around me that had been in it for years and said, that's a load of crap. And, you know, my mentor, I've mentioned this before. I said to one of the guys that sort of turned me around, have you heard of Elliott Wave? And he was like, don't go there. I've taught you Elliott Wave. It's market structure. It's the same thing. Don't go there. You'll be lost for 3 to 6 months and you'll come back and you won't know anything more than I've taught you, which is it goes up and down. And I went off and I did Elliott Wave and I came back 3 to 6 months later and I said, you're right. It's binary. It goes up and down. Yeah. All Elliott Wave does is show you a way of reading price going up and down. I can see that on my chart already. There's an Elliott Wave forming here. It'll happen here or it won't. But whether it does or doesn't matter. All Elliott Wave is a way of getting into the market. You can do that right now by pressing the buy and the sell button. Either that Elliott Wave pattern will play out or it won't. But you're not going to make money because Elliott Wave exists. You're not going to make money because you're trading Elliott Wave. You're going to make money because you press a button and then the theory that you have plays out or it doesn't play out. And you're applying a risk structure around the theory. It's that simple. But the problem with the industry is there's a billion people telling you a billion different ways to press a binary button. And you will always be looking for a better way to press a button that either is a buy button or a sell button. The only way you make money is exiting when the price is in your favor. That is time. So I've pressed the button, I've waited, it's gone my way, I've exited. If it hadn't have gone my way, I wouldn't have exited. But it's a binary decision. Yeah. Some people will not accept that. They will look for the Holy Grail for 4 years and then they will give up. The people that look for the Holy Grail for 4 years and go, it doesn't exist, so how do they do it? Will continue and they will be the ones that will make it. But they've got something programmed that means you can't drop it. Maybe it's addictive personality. Maybe it's ADHD. We don't know we've got it, we have, and that is coming out in trading form. But there's something I don't think you can teach a person, because a normal person, if you gave them exactly what I do every day and said, here you go, this is what I do, and I'll show you it for 10 days, and I'll do it for 10 days, and then you're going to do it with me for 10 days, they will get it wrong. But there's something there that is like, I'm not really interested in it, I can't be bothered with it, I'd rather do something else. It's a personality thing. You can't program that. But it's interesting. Same with sports people, isn't it? You either, the ones that make it are the ones that put the time in. The ones that don't make it are the ones that are looking for the Holy Grail EA they can stick on a chart and suddenly make some money and they don't have to do anything for the rest of their life. that was the case, we'd all be doing that. We'd live in the Star Trek universe. There'd be no such thing as money because we all had unlimited wealth. It doesn't work that way. There isn't something that gives you unlimited wealth. I would be sitting here in a mansion. I'm not. What do you think about my target of 137,800? Yeah, it's 50% retracement on the leg. So we had a small accumulation around that area. So there was a wobble, technical term, there was a wobble in the market. However, the difference between that and that isn't much, but that is the election low. Right now, because that's the election low and a 38 retracement, not that that number means anything whatsoever, when it gets there, that happened. So that I would be more comfortable with. But there's a 50-50 chance of it completely blowing through that straight to here. But for the difference in that, knowing that support resistance bounce plays work, I'd be probably more comfortable than that. But, you know, one of them will. That's a 50% retracement, which is here. Which is here. So this whole area here is a zone where if we're going to continue bullish, which is the if, and we get to that zone, there's multiple things got to happen. First of all, we've got to get there. Second, we've got to be long bias. That's weeks away. Yeah, it's taken us from here like 1, 2, 3, 4 weeks to get there. So don't expect to get there until December. Yeah, you could be in this until December. Equally, Trump could say something stupid and you could be here this afternoon. Yeah, this is 225 ADR. Yeah, 2 strong down days, profit take moves, you're out. Yeah, look at this 4-week move. 1 week, we undone half of it. 2 weeks, we'd undone 70% of it. Climbing up the stairs, falling down the elevator shaft. We've climbed a hell of a big flight of stairs here. Yeah, I don't see any reason why we can't fall down very, very quick. But you'll probably find them will sit around and go, holy crap, what do we do now? And I'm not convinced we'll actually do an awful lot until January, to be honest, until he's in. So I don't know, but that's all I will ever look at, where I think it's going, and it will either get there or it won't. So that low is a good level. There's nothing wrong with your target. It's a good previous high level from April, May. But the thing now is, and this is the curveball with what we have as a situation with the US dollar now. The curveball that we have been given is Trump. Trump's presidency last time was very, very different to everybody else's presidency. The way that he runs the country, the type of person that he is, the things that he wants for America are very different to the rest. I would be super cautious with this. I would be more inclined to get out at a break even rather than hold, but that's just me. Yeah. But the target is good. There's other targets before it, but there's always going to, and this is the thing with trading, with targeting, there's always going to be a target. There's a target there. Yeah. There's always going to be a target before another target. That's what targets are. You either hit the target or you don't. And if you what I mean by hit the target is you either bounce at the target or you don't. If you don't bounce at the target, you're going to bounce at the next target. If you don't bounce at that target, you're going to bounce at the next target. One of those things is going to happen with a high degree of probability. But which one is it? And this is where the money is made on these. Someone once said to me, a trend trader, which is true, he makes the vast majority of his annual profit on less than 20% of his trades. It's the old 80-20 rule, basically. You've probably heard it. It applies to many things in life. 80-20 rule. 80% of the time this will happen, 20% of the time that will happen. And it's one of those weird anomalies like Fibonacci ratios that just seems to play out and happen. But 20% of his revenue, 80% of his revenue comes from 20% of his trades. And 20% of his trades are meaning that 1 or 2 months of the year, he hits that home run. The reason he makes money is because he hits the home run and he holds the home run. Yeah, because he's a trend trader and he's programmed brain-wise to be a trend trader. I'm programmed the opposite. I can't hold stuff, which is why I trade mean reversion. He can hold stuff, which is why he trades trends. Yeah, if you have the ability to get onto this and hold this, that's you. You do that. Don't do this. This won't work for you at all. Yeah, if you can get onto that and hold that. But my problem is always, where the hell do I get out of this thing? And usually it's when it's done that. And that drives me mental. Having so much money on the table and having to give half of it back because it's now crossed below the moving average drives me nuts. I want money coming in regularly. I don't want to hold on for 6 months to get the mortgage paid for 6 months. I want the mortgage paid every month. That's me. But everybody's different. You've got to try everything, unfortunately, to figure out what you are. And you won't know that until you've tried things, which is why this takes so long to crack, because you will have to hop systems to find ways of trading. But like I said, in the members group, there's only 3 strategies: mean reversion, trend, and breakout. Every strategy you ever see on the planet is one of 3 things. Yeah. And you can give me any strategy you like now, any indicator you like now, and I'll tell you what strategy it's trading. There is only 3. The market can only do 3 things. It goes up and it goes down and it moves through time. During that process, it's either going up and down, it's moving to a new zone, or it's moving up further away from where it broke out from. It's either range bound, breaking out, or trending. That's it. It's all it ever does. Identifying the state that it's in doesn't help you. This is trending. Excellent. I'm going to be a trend trader. No, it's going to mean revert. So you getting in on the trend is going to fail. Or is it? I don't know. But the decision made there has nothing to do with the fact that it is now trending. What it does next is either go into a range. It won't break out, obviously, because it is already trending. But it's either going to go into a range or it's going to continue its trend. So then when it's in a range, you are looking to become a breakout trader, or you are a mean reversion trader. Again, I'm not going to keep going on about Top Step TV, but Hogue, one of the guys on there who's an ex-pit trader, he said, what I'm going to do is I'm going to wait for the market to open, and then I'm going to sell the high and I'm going to buy the low, and I'm going to sell the high and I'm going to buy the low, and I'm going to keep doing this until it proves me wrong. Because 80% of the time the market spends in a range, mean reverting. 20% of the time it goes into a breakout trend. So what I'm going to do is I'm going to focus on the 80%, which is what I do, is I'm going to mean revert. And when it breaks out, I'm going to stop out, and then I'm going to flip and reverse and see if we get a trend. And if we get a trend, I'm going to become a trend trader. And then when that trend ends and it goes into a range, I will get stopped out a couple of times and I will turn myself back into a mean reversion trader until the market proves me wrong. And that's the key. The market will do what the market wants. You can't force it. You can't identify what it's going to do next. So you just have to do what it's doing, which if it's doing this, you do that. When it does that, you stop doing that. If you're no good at that, you do that until it does that. If it does that from the open and you're no good at trading that, you don't trade today. And it's true, isn't it? But the way that you make money is by identifying the crap. So when I looked at that, this strategy that we've got on test at the moment, I'm not looking at any of this. This is the expectation. I'm looking at this, yeah, because it's good at this. So I don't need to worry about it. That is what I worry about. Yeah, this is what the trade manager dashboard is all about. And this is what I say in the position trading bootcamp. I'm not focused on anything in green. Anything in green is doing what I'm expecting it to do. I'm focused on this because this isn't doing what I want it to do. So I need to watch and manage this. This will all just go down here. When it's ready, when it's ripe, when it's cooked, it's just done. This, when it doesn't, I've got to focus on it. You focus on what's not working in your trading. If it's working in your trading, forget about it. It's working. Don't try to break something that's not broken. Key. It's really good. You should watch it, Top Step TV. It's on YouTube every day. It will drag you into Top Step and they'll try and flog you a load of evaluations and you'll fail them all. But it's interesting because they are pit traders and they are exactly the same as me from a psychological point of view, in that they just go, I don't know where it's going. I'm just going to trade what I see. That's it. I trade what I see and I look for where it might go. That's it. They have strategies based around where it might go, as I do. Same thing. It's all the same stuff. But what I don't do is worry about where it's going because I can't control that. It's a psychological thing. They're very good at that because they were in the pits, these guys, and they know open outcry and they know momentum and price action is what drives the market, and sentiment. Supply and demand and sentiment is what drives this thing up and down. In Forex, it's fundamentals, but it's the same stuff. Fundamentals are what creates supply and demand and sentiment. Where is the Lambo? My Lambo's here, look. I got one. See if I've got opening doors, look. Now, what I could do is take a photo of that with a green screen, sit myself on the bonnet and try and sell you a course, but I haven't got a green screen. Right, that's all I've got for you today. We've been waffling a lot, haven't we? But it's good waffle. It's always good to waffle. FTSE's breaking out. So next hurdle is yesterday's high, which is before my target. So again, if I watch that price action and I see a bounce there, I'll probably close it. If I go off and walk the dog now, I'll probably hit my target. In fact, you could probably stick your target up a little bit further because ADR's up there. In fact, it might even get a 125 ADR day. We got our retail sales coming out for the US, so we might get a kick on the FTSE this afternoon. Who knows? Tune in on Monday and we'll find out. Anybody got any other things they want to discuss? Anything else they want to look at? Member stream next week. I haven't got planned what we're going to do in the member streams next week. Much of the same, I think. I've got a breakout EA that I'm working on at the moment. And we might do some drills next week. Position trading drills with the position trader EA in the back tester. And what I thought we could do is potentially trade some of the squeezes and see what happens in a squeeze. Like we could trade the US dollar CAD move that's coming in at the moment and look at how we get in and how we get out of them, more importantly. I'm liking the strategy talk and evaluation in the member streams. Yeah. That's what I want to use the member streams for, really, is strategy development, basically, and EA development. I think that's the best time. But obviously, we got to do all the... I've covered in the member streams. We've covered all the core stuff that I want... That's not the button. All the core stuff that I want to cover that I think is the most important stuff is all in here now. About strategy development, price action, market movement, all that sort of stuff. That's all you need to know. Everything, all the videos in here, basically, if you watch just the videos in here, if you're a new trader or have been around for a few years, there's nothing else you need to know. That's it. It's all in there. Now let's build some strategies out because we know how to apply risk. We know the 3 things the market can do. We know the 3 strategies that exist. Doesn't matter how you get in. Do you want to do it that way, or that way? Because there is only 3 ways. You know, so it's all about trying to develop strategies around that. And come up with diversification of strategy so that, you know, whatever the market's doing, there's a way to extract cash. That's what it's all about, isn't it? It's just trying to make money from market movement. Another ADR's just gone off. CAD yen. So good yen movement today. So mean reversion opportunities on these yens. Whoops. So we've got an ADR hit there. So if we break that low today, obviously we're at potential exhaustion point right now. So beautiful. Reversal alert is too far away, so you'd have to take price action on this. But good looking bounce. So if you suddenly see that, or we see that, have a little long. Stop under low as a scalp. If this pushes down today, I am going to get... am I going to take any yens? I don't know. I haven't got the EA set up to take any yens at all. I'm only ever going to trade yen long because of the swaps. So but I want a proper extension on it if I'm going to get involved. So I want this either down here or I want to be down here. I want at least a 125 ADR. That is a good area. If we were to get beyond 150 ADR today, might take a long. Look at market structure. Yeah. So if we're going to continue bullish market structure, that's where we buy it. Anybody that's short on this will be getting scared here. Likely to get a bounce. If enough buyers want to enter the market on the bounce, it'll potentially pop. And obviously we'd be out of those highs. But this is the yen. We don't know what the yen is doing. What was the other one? Euro, wasn't it? No. Pound. So again, pound very range bound at the moment. Got weekly low, double daily low. Again, good, intraday scalp opportunities. Yeah. This whole area here from 100 to 125 ADR, lovely long opportunity. So you get in down here when we get some bullish price action coming in. If we get some bullish price action coming in. Yeah. Something in the region of a quarter of an ADR stop. Go for half an ADR TP. Risk reward based rate trade. That's the sort of trade I would take for a stop loss with a stop loss. So if you look at the invalidation points on this. So we got that low, which is the previous day's low. We got that weekly low there. We got that area there. Yeah, so if we push down into 125 ADR and we get a bounce off the weekly lows, yeah, stop below that level, which is going to be somewhere in the region of 37 pips, around about a quarter of an ADR. So if you stuck a quarter of an ADR on that, anything above a quarter of an ADR movement to the upside today makes you money. If it moves up a quarter of an ADR, stick a break even on it. And if we start to rally, you're off. This is the sort of trade that I would take in prop, obviously only on futures, but this is exactly the sort of thing you sit around on your hands all day waiting for this thing, and then you take it. Prop is all about risk-reward ratio. The only thing you've got to do in prop is hit a target. My account at the moment, I've got to make 6 grand. So all I'm interested in is risking $1,000 to try and make 2 or 3. If I can do that 2 or 3 times, funded. Yeah. But whether it works or not, it's nothing to do with me, is it? I could have 4 losing trades in a row and blow the account. 3 losing trades in a row and blow the account. But it's not my control, is it? But this is what you wait for. You wait for the A+ setups and then you manage your risk. It's all you can do with prop. But you're not going to hold that account because at some point you are going to get X losing trades in a row. And it ain't going to work. But it's about milking it in between, isn't it? I'm liking the strategy. I've already answered that one. Hopefully aggressive. Stop loss on US dollar CAD doesn't get ticked. Then full with the news. Yeah. So this afternoon's news, obviously, bear in mind, obviously, we've got retail. Yeah. I mean, just hope for negative figures on retail. We get negative. We're looking at a drop anyway. So the market's already forecasting a drop. If we get a bigger drop than expected, yeah, there's no reason why we shouldn't see an ADR on the US dollar this afternoon to the downside. So, yeah, US dollar CAD, there's 5-minute reversal out there, 15-minute reversal out rather. You've had the 5. God, they're very tight, aren't they, these little reversal alerts today? Clear on the 30 and the hour. So, you know, don't be surprised if it pushes back up, but it shouldn't invalidate that high. So with aggressive drawdown control positions, because they use a stop loss, the position trader EA automatically puts them in at half an ADR, I think. And then you can adjust as necessary. But if it invalidates that high, you know, if it give it a chance to double top it or maybe tap it. But ideally, we shouldn't see that get hit. So that's a safe aggressive drawdown control position. Negative retail numbers, you'll be down here this afternoon. Potentially. Yeah. Always look at where it's going. Yeah. We can't control it, but it can only do 2 things. And if it's going to go down, it's going to find support. Where's it going to find support? That's really the best place. Negative news, positive news. Or, as expected news, can do either or nothing. Not in our control, is it? Right, I'll leave you there. Anything you need, let me know. I'll be in Discord. Otherwise, back on Monday. We'll have a look at what's coming up next week quickly. G20 meetings. CAD CPI. Pound CPI. Unemployment, as usual. It's PMI week next week. So PMI's next Friday. So very light. We've got big one on Tuesday, but apart from that, pretty light week. So we'll see what happens. Oof, expecting a bounce on the CAD. Right. Anything you need, Discord. Otherwise, I will see you next week. Have a good weekend and good luck with your trading. And I will speak to you soon.